Hello everyone, so this is part 2 of my mini course where I show you real market application of the volume profile and how we can use it beside many other tools like seasonality. So the first thing I will show you is something very important. So what do we have over here is how does market move? So market is always trying to find liquidity because liquidity is very important for institutions to execute their positions. So we have fair value or a consolidation or rotation zone, and we have the trend, which is the fair value gap, and the gap between two fair values or two consolidations. And as you can see over here, as ICT tell people, when you have this pattern, then this is a fair value gap. This is not a fair value gap. This is just a candle pattern that shows trend strength. So this means there is no liquidity over here. This is why there is this bullish rally at this example. So fair value means a zone that has so much liquidity, it's called fair value or consolidation, and the job of the market is to look for those places. So as I told you, so institutions can execute their positions without moving the price so much. And institutions, if they want to buy, then they need liquidity or a zone full of sellers, because liquidity means if I want to buy, then how much the price will move up. So if there is so much sellers, then the price won't move so much if there is the same contracts being traded. And this is what institutions need. They need to execute most of their positions here and not in worse and worse places on this trend. So that's it. This is what I need to show you. So let's execute, and there is a note I will tell you. I don't trade Bitcoin. We're just having, let's say, an example. And of course, we're using volume profile from anchored from this level to the last, so it keeps updating. So why I choose this level? Because basically, why would I choose only this level when there is zones, important zones before I can get from here? So this is the only place I can get, but usually I just use the last week because you can watch trade idea number 11 where I showed how I got my Australian US dollar or odd USD position, and you will understand more. So let's start over here. As I told you, when there is those gaps and the market reacted to them, this is very important zones, and we have cluster number 1, cluster number 2, and cluster number 3. So basically, how does the market moves? Basically, I'm going to take my tools from here. So this is a normal volume profile, which is one of those. And if price is, this is the point of control where there is the most liquidity. So price acts like, or this acts like a magnet for price. And we have those low volume nodes, which are the very important places because price often reject or break through it so strong because there is no liquidity over here. So when price is coming like this, and it will break through this place. Can you wait for retest at this level or at this level? So you don't wait price to reach this level to go long. You wait price to retest here to go long. So this is the idea. So what we're watching over here is there will be a breakout at this level under the high volume node, and then it will go down. How did I know it will be a breakout? Maybe it can come from here and go down, or it can just break through this zone. Let me wait. It can break through this zone and then go up. The first thing we need to know is the US dollar is in a very strong. Let me just show you the US dollar is rebounded from a very strong support. I will go to the daily chart, and this is the strong support, as we can see. Of course, price reacted to it many times in the past. We have a bullish seasonality. So what does seasonality means? I use the 10 years. So every time of the year, there is an average of a bullish trend, average of the 10 last years, of course. This is the parameters I use, and you can see that the price rebounded from this zone, and you can see that there is a rejection. So price opened here, it goes down, and then it made the high and then closed a little bit over here, and then just the day after it there is a bullish candle, and we're going through a bullish seasonal trend for the US dollar. And we come back to the Bitcoin. We use seasonality. You can clearly see that in seasonality from Monday, so from here to the next, okay, till Wednesday. So you can clearly see there is a bullish or a bearish downtrend. So let's say the first target to go for is this level. So now we have a very high probability that price will reach this level, and then price can go for this level. So you can see that bearish trend, price can reach this level and then potentially can have his week or the weeks like those ones over here. So as the first target, if I'm going to short, of course there is a little bit touch over here. So what I would do is, so I will enter at the beginning of the zone I made, which is over here. You can see it, clearly see it, and I will put my stop over the last rejection, which is over here, and I will target as the first level. I will target where this bearish move ends, or where it got rejected. It got rejected at this level. So for first TP, I can just go over here. So this is to 102. And then for TP2, I can go where this level ends. So what can you do right now if you didn't reach this position? You wait for a breakout. So you can see this level. You wait for a breakout. If there is a breakout from here, you wait for a retest. And of course, price will leave another rejection like this one, where we put our stop. And then you go for a short from here, and you put your stop loss above the available rejection. Potentially, it will be, you can see this low volume node. So I'm going to expect the rejection to be at this level, where the low volume node ends. So probably it will be not more than this, and then I can target this level where the red candle ends. You can see that where it got rejected and we start the bullish move. So this is another 3 risk reward ratio, and I hope you understood how you can use volume profile to get your key levels, and that's all. So what I consider you to watch, or recommend you to watch, is the first part. So the first part is very important. I explained the very basics of volume profile like no one ever you'll face in the YouTube, or at least 99% on YouTube won't show you the same knowledge I was explaining on the first part. And sometimes I post trade ideas. Well, most of the times I do it, and I explain why I'm entering here and why I'm putting my TP there and my stop over there. So make sure you watch them to get more experience, and I hope you have a very great trading journey. Thank you.